All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. I'm just doing a quick audio check here. I'm getting note here from Michelle that the audio did not come through last video, and just want to make sure it's coming through. It came through just fine on our testers here last video, so I'm not quite sure where the audio mishap might be. So just testing here for a second and making sure that the audio is going out. I'm getting the thumbs up from Jason. All right. Sounds good. All right, let's go in and take a look here. The ISM number came out, and you can see what the market reaction has been to that number, and it's been sharply negative as this number came out right here, and we saw it create further drop. We're getting into the bounce mode. There's huge volumes going on right now with things, but we have a morning layout this morning where basically everything China related is getting sold. Right, the Apple news, really catalyzing, some of that. Boeing isn't exactly helping it, and so we're seeing those areas really get sold off. The Microns of the world, even the transports, which have a lot of exposure to China, getting sold off to a high degree here today, and then we get this ISM number. This ISM number was one of the worst numbers we've seen in years. Not the raw number, but the directionality of this number and the internals on this number. One of the worst numbers we've seen in years. And, we talked about last week, we talked about these 100-point rallies that we saw in the market and how typically they're not market bottom. When we're talking about big bad bear markets, typically that type of fast whipsaw action tends to happen in the middle of a bear market. And so there's this kind of risk of further decline. And what would drive that? Well, earnings and economics would drive that. The fears drove the initial drop, and the earnings and the economics would drive a further drop if we're going to have it. Well, we see Apple, we see Boeing this morning, Delta this morning. Obviously, they didn't come out with earnings reports, but, good enough, right? They came out with some basically pre-announcements and some pretty negative stuff in all three. Boeing was analyst, not company related. But overall, now we get economic data, and this is a very ugly number. New orders down 11 points. Now, this is a survey, but it is a very significant survey in terms of, what's going on out there. And while, employment, I could care less about. It's a lagging indicator. And, it just, pricing means a little bit and all of that. We could kind of microanalyze. We don't have to go any further than looking at new orders. There's a huge drop in new orders. This has been the strength. This has been the bull's argument. This has been the bellwether here for the manufacturing sector over the last year and a half. And to see new orders fall off to this degree, it is huge. It's huge because it reverberates through, and it reverberates through for months to come. Production dropping, right, which we would expect. The orders are dropping. Inventories, okay, who cares? But prices, they're going to drop when new orders drop. Not enough orders coming in, prices are going to drop. Backlog of orders are going to drop. And we see all of that happening here. So a very hard, fast drop in some of the sentiment here for manufacturing. And, that is it's a terrible number. And we don't typically see the market have an immediate reaction to this number one way or the other. It tends to be fairly muted. But today, it's been a pretty sizable reaction to this number. It catalyzed, 26 points lower? Now we're snapping back a little bit. So that's a big reaction for this number, but it is a very negative number. Now, to go with that, we have a U.S. President Trump tweet. which, a lot of his tweets I don't think are market significant. And, I know every time I bring up U.S. President Trump, it brings up, politics and everything else. I'm not talking about it politically or whether you like Trump or not, or whether you're a Democrat or Republican or any of that stuff. I'm looking at this from a market standpoint and how the market looks at what was said or what was tweeted. And the tweet reads this: the United States Treasury is taken in many billions of dollars from tariffs we are charging China and other countries that have not treated us fairly. In the meantime, we are doing well in various trade negotiations currently going on. At some point, this had to be done! Exclamation point. Right? And look, I mean, this isn't a huge surprise. This isn't exactly groundbreaking, type of news. But, it's that kind of entrenchment attitude there. This kind of idea. This is going to keep going. We're not backing off. We're keeping going. We're going to go through the process here. And, what's that tell you? It tells you that it's not going to end tomorrow. It's not going to end the next day. And, it is one where we will see, this continue. And, that is a big negative for the market overall. Now, from a price action standpoint, right? From a price action standpoint, today's action is incredibly negative. We saw some bullish action start to come in to names like Triple M yesterday, right? And we saw these kind of bullish engulfings where, they were coming in bullish engulfings off the 7-day moving average. And, you look historically at these, and they tend to go higher, right? The odds are strongly in the favor of them going higher. And, mentioned yesterday, I'm not going to chase into them. I just, I couldn't get myself to do it. Some of it for option pricing and other for just the overall environment. And obviously the Apple news and now the ISM news and the Boeing stuff, is pushing things lower. But you can see things like Triple M and a lot of other things out there blowing below yesterday's lows. They're taking out yesterday's lows. That is a very bearish, situation to have, kind of a fairly bullish type of price action yesterday, get not only no follow through, but get sold into aggressively. That's where you tend to see further down, come in. And we're seeing that with individual names. We're seeing that with the overall market itself. We're seeing that with, throughout sectors. And, we are seeing a whole lot of stocks with fresh moves back below the 7-day moving average today. 176 companies in the S&P 500 have fresh moves back below their 7-day moving averages today. From Caterpillar to Nike to Berkshire, Boeing, Johnson & Johnson, Intel, Twitter, NVIDIA. This is a huge number, one of the biggest numbers we've seen in a while, of just stocks on 1 day moving from above the 7-day moving average to below the 7-day moving average. And, that's tends to be what we see when a bounce is over. When a short-term rebound is over. And one of the things that the bulls don't have right here. Bulls have had oversold for a little while, right? They've had that argument. The bulls have had the argument of, hey, the economics are holding up, because that's what we've seen. They've had the argument of, hey, you know what, earnings, okay, you know what, they're you start to look at, it's not too bad. There's going to be a little slowdown, but it's not to a degree that's, makes these companies significantly overvalued. And what do we get today, right? Well, we get a breakdown and it's not oversold. We get a piece of economic data to kind of go with China's data last night that just, ouch. And then we get the whole Apple stuff, which just reverberates throughout the market with a whole bunch of names, and showing some of the big earnings, fears that they're actually being realized. This isn't an environment where, it's just fear and there's no realization of those, and seeing those get realized here with Apple or with Delta, that's what we're seeing going on. So this is a very negative day in terms of what is happening and what is going on, and it is one that it's worse than it was this morning, and something that I think there's a very high probability of downside follow through. Now, a couple things that I think are very noteworthy: EWZ Brazil, we talked about yesterday. Yeah, Brazil, then they don't care, and they don't care about the sell off. They're like, hey, we're in breakout mode. Everybody in the world, we're going to go buy. They're buying Brazil. And you see Brazil holding up phenomenally here. We don't see all the Brazilian stocks, right? The Vales, it's not holding up especially well. PBR is holding up pretty well. Banco Bradesco holding up pretty well. But it is one where Brazil, clear outperformer here today, and likely continues as we go forward. We do see option pricing jumping. The VIX is up. The VIX is up pretty big. Let me show it to you here, just on a stock charts chart. But you can see it's up about 11%. Now, where does it take it? Well, right back here to 26, and pretty much where it was on Monday. Right, so it's not like it's a move that is even outside of yesterday's range, but definitely correcting some of the drop that was seen yesterday here in the VIX and the VXX. We see doing similar, but continuing to outperform. And not outperform, meaning outperform today. The VIX is up more today than the VXX, but the VXX is a little closer to its closing highs than what the VIX is. And we continue to see that future volatility is not contracting, it's not compressing, it's not pulling back here at all. So overall, with the way the environment is, you got things like Starbucks, fresh move below the 7-day moving average. These are some very interesting short setups and some things that I'll be taking a look at as the day progresses. I do want to see them hold. It's just one of those things that, yes, market down 55 points. It could go down another 55 points today. It could rally another 30 points today. We're going to have a lot of big movements still coming into the market here today, and I want to see where some of these daily charts end up. And if we are looking at things like Starbucks with fresh move back below the 7, Bank of America fresh move back below the 7, though it would need to sell off a little bit more for that. A Twitter, for instance, fresh move back below the 7. These could be some that really have a rough week ahead as we march on into earnings season and into the jobs report. And let's keep in mind, we had a phenomenal ADP report this morning. The ADP jobs report, big blowout number, big upside number. Over 100,000 more jobs created than expected. Right? What's the market reacting to? It's reacting to more significant economic data and earnings. And the bottom line is, when it comes to jobs, when it comes to what jobs signify economically, it's just so minor compared to other things, yet I know it gets all the pub, it gets all the news, it gets all the attention. But you even look at a day like today, and as far as market participants are concerned, jobs not nearly as important as many other things out there. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.